would rather sell their clothes than not travel. I'm not sure we're ready for thousands of naked millennials walking around the streets, so perhaps we can get a crowdfunding page going or something. So as Mark mentioned, our next speaker is a firm favorite of this event, and we're delighted he's back again this year. Andrew Staples is the editorial director of the Economist corporate network. I always enjoy hearing Andrew speak on the big issues shaping the economic landscape, but the last couple of years, I have to say, Andrew, the message has been a little bit depressing. So I'm hoping that with a potential end to Brexit and a potential end to Trump, your message might be a little bit more uplifting. So let's see. Please welcome Andrew to the stage.
Scott, Mark, thanks very much for the very kind introduction, and I hope I can live up to your expectations. Welcome, everybody. It's a great pleasure for me to be here with you today. As Mark mentioned, I think over the past 4 or 5 years, I've attended this conference here in Asia Pacific, and it's been my great pleasure to share our thoughts, our view on what's going on with the global economy. So you're all here to think about the experience economy. I'm just going to focus on the second part of all of that, and welcome and congratulations for making it to this economics class so early in the morning following the cocktails last night. Bear with me, I'm going to go through some slides, and basically what I want to do is map out how we see the global economy, some of the big trends shaping our global economy, and then how that impacts here on us in Asia Pacific. So I'll be thinking about those, I'll be thinking about risks that we see in the global economy, and I'll be sharing our key economic forecasts as well, and then a little bit of a look into 2020. So Scott there just mentioned two of our favourite themes, which are Trump and Brexit. I don't really want to talk about Brexit anymore. I'm from the UK. I think everybody's sick and tired of it, but maybe we'll touch on it a little bit later on. But Trump certainly we'll be talking about quite a bit. So let's get going then. First and foremost, just to give you a bit of context, so I'm from the part of the business from the Economist group that's directly related to our corporate members, and we're absolutely delighted to have Travelport as members of the Economist corporate network here within Asia. And all of these things here that you see in this word cloud, that's what we're interested in. What's going on with politics, economics, technology. You heard about innovation. You heard about all of those trends around millennials, populations, demographics here within the region. We look at all of those things and we help our members to get a sort of deeper, more holistic understanding of the business environment within which you will operate. To give you a slight edge, I guess, to be looking over the horizon a little bit more and thinking about what that means for your businesses, for your clients as well. And that's what I hope to achieve today. So first and foremost then, a little bit of global context. And this is the sort of question that I'm posing. What are these big forces shaping the global economy today, and what does that mean for your business environment? One of the great pleasures of working for The Economist is we get to use these fantastic covers all the time, so I'm going to be referring to some of these. But I just want to flag up, I think, this issue at the moment. Slowing growth, growing risk. So the global economy has certainly been slowing throughout 2019. In fact, we think this is probably the worst year for global growth since the global financial crisis, if you go back over 10 years or so now. I'll come back to that a little bit later. Part of the reason for that growing or slowing growth is growing risk, and there's no shortage of headwinds facing the global economy faces. And I'm going to go through a few of those now. And all of that is sort of capsulated in this, this cover here, Markets in the Age of Anxiety. Where is this anxiety coming from? Is it the populism, the nationalism, the trade wars, the concerns over where technology is taking our economies, and so on? But anyway, all of these come together to create this age of anxiety. And what does that mean for business? Well, should we be making that investment decision? Should we be looking to hire more people or invest in that technology or not? These are some of the issues that I think add up to these headwinds facing the global economy. We could also be thinking, sort of in big terms, if you're thinking about economics and sort of money flows and so on, 10 years after the global financial crisis, most developed economies around the world have very, very low, ultra-low interest rates still. It's really only the United States over the past few years that started to ramp up its interest rates, normalize its interest rate regime. But even in the US, which is still growing, has been growing very strongly over the past few years, this year the Federal Reserve decided to cut interest rates. They've cut them 3 times this year because they're worried about the outlook for economic growth. The European Central Bank just recently announced another round of quantitative easing, in other words, pumping money into the economy to make sure it keeps going. Japan has negative interest rate still. And this is quite a bizarre situation for the global economy, where you see very, very low interest rates, and also, if you look in all of those economies, very, very low unemployment as well, you should see inflation coming up. And therefore, you should see central banks start to raise their interest rates. That's not happening. So all the sort of fundamentals of economics, of monetary policy, are being questioned by this strange environment. And that's leading us to this other question of recession. You know, a lot of people are talking about recession. The IMF recently downgraded its outlook for global growth. I mean, the good news is we're not forecasting a recession. I'll come back to our growth forecast a little bit later on, but there are certainly plenty of risks that could tip us into a recession. And this year, as I mentioned, we've seen very, very weak growth for the global economy. We think the global economy this year will grow at about 2.3%, slightly better next year, 2.5%. We'll come back to that. So where's some of this sort of geopolitical risk coming from? And I think this is one of the biggest ones. President Trump, over the past few years, has really taken a bit of a wrecking ball to some of the established structures of the global economy, whether that's in trade, and of course we can be talking about the trade war, come back to that in a moment, whether that's shaking up long-standing relationships with former allies. You could be thinking about NATO in Europe, you could be thinking about Canada, Mexico here within the region, what's going on with North Korea, with Japan, with South Korea and elsewhere. All of this means that a lot of those certainties that we've grown up with over the past few decades about the global economy, about America's role within all of that, are up for debate. And that's really creating some dislocation in the global economy. If you wanted a really sort of specific example, think about what happened in Syria recently, where the United States have been supporting fighters against the Assad regime. They suddenly, overnight, based on a tweet, decided to pull their troops out of northern Syria. Russia moves straight into that power vacuum there. This is the type of issue that we see around the world, and that's adding to that uncertainty and risk. We could also be thinking a lot more about the relations between the world's #1 economy, the US, and the world's #2 economy, China. And this is a pivotal relationship for the global economy, and it's not in a very good condition at the moment. We have this ongoing trade war. We have other issues in the security environment and politics around technology and so on. All of this, we think, amounts to a new Cold War, which again puts a bit of a deadening impact on the global economy. And a lot of that, we think, is around this sort of battle for digital supremacy. We were hearing there from Mark talking about innovation, thinking about virtual reality, artificial intelligence. That's the real battleground. Who's going to have dominance in these new technologies? And China rapidly emerging, Make in China 2025 policy as well. Who's going to be building your 5G system? And we come back to that a little bit later on, because 5G is going to underpin that next massive leap that we're going to see for the global economy. And there's no shortage of other issues around the world. We could be thinking about Iran. We could be thinking about Hong Kong and the impact on the business environment there, on investment decisions. There's my favorite one, Brexit. And just on Brexit, we thought earlier in the year that we'd have an election by the end of this year. That's taking place on December the 12th. Our latest analysis is that we think the Conservatives under Boris Johnson will get a majority, and therefore Britain will be coming out of the European Union quite soon after that, by the end of this year or into 2012. There's a risk that that doesn't happen, that we see some kind of coalition government and Brexit continues on and on and on. But either way, if we do come out under a Conservative majority, that's just the starting point. Then the relationship with Europe needs to be negotiated, and these trade deals can take years to be negotiated. So, it's not the end, it's the end of the beginning. And finally, we could be thinking about more secular issues, for example, climate change and how we're all adjusting to that. Earlier this year in Singapore, the Prime Minister there announced a massive package of investment spending to essentially future-proof Singapore against rising sea levels. In the same month or so, President Jokowi in Indonesia announced that he'll be moving the capital of Indonesia to East Kalimantan because Jakarta is sinking. And sea levels are rising, and there's nothing that they can do about it. So climate change and how resilient you are, or cities are, countries are, your companies as well, that's going to be increasingly an issue to keep in mind. And what does all of this mean? Well, this was a really interesting study. Some professors at Stanford and some economists at the IMF analysed Economist papers, our research papers, our country forecasts and so on, to see how often we use the word uncertainty and words related to uncertainty around trade. And what you've got here, I've just pulled out Canada, China, United States, that sort of light blue line along the bottom, that's the global average. That's on average how many times we see that word uncertainty related to trade. But look at these dark blue spikes that we have in recent years. That's all President Trump. That's all renegotiation of NAFTA. That's the trade war with China. That's the threat of a trade war with Europe. That's the WTO, which next month will actually cease to function because we won't have enough judges to fill the dispute resolution council there as well. So all of this creating uncertainty around trade. And what does that mean? Well, how are we going to ship stuff around here? Should we be relocating part of our value chain out of China into Vietnam, for example? All of this slows down investment decision, adds costs to the global economy, and therefore one of the reasons why the global economy has been slowing. We could also be thinking, sort of underlying all of that, that this issue of globalization, that globalization itself, as we know it, trade, integration, spread of technology, movement of people, barriers to trade coming down and growth going up, all of that has slowed in recent years. So we came up with this idea of, or actually not us, but somebody came up with the idea of globalization. And just to give you, an idea of actually what that means, if you look at these measures here, these are all those traditional measures of globalization. For example, foreign direct investment, where a company from one country goes to another country, sets up a new manufacturing plant or something like that. Foreign direct investment. That's been dropping over the past 10 years, year on year. And if we look at things like trade, container shipping and all the rest of it, this year is the worst year for global trade since 2008-9, when we had that collapse of the global economy as well. Global trade this year we think will grow at about 1.5%, which is pathetic. Normally it would be sort of 4, 5, 6% a year or so. So on all of those sort of traditional measures of globalization, things have slowed down. We've gone into a slower gear. And why is that? And what's shaping that? Interestingly, though, if you come down here, if you're looking at sort of international parcel volume, e-commerce, if you're looking at permanent migrants to the rich world, people moving around, cross-border bandwidth, so that's data, that's Netflix or whatever it might be, and if you're looking at international air travel, all of these are on the up. So, should we be thinking about the economy in a different way, rather than those traditional methods of factories overseas and container ships and so on? Actually, should our focus be on the new economy, around e-commerce, around technology, around movement around the world? And just a final note on that sort of global context, I really like this map, although I'm not sure how good the data was back in 1 AD, where you see the start of that line. But essentially what this is mapping is, where's the center of economic gravity for the global economy? And if you were to go back a couple of thousand years, it's here. It's China and India as we know them today. This is where most economic activity was taking place. Britain was some soggy island off of Europe in the Atlantic. No economic activity at all going on there. But as you get into the 1700s, the 1800s, the Industrial Revolution, steam, rail, steel, pulls that center of economic gravity away from the east to the West, where it's been for the last couple of centuries. You could be thinking about imperialism, empires, technology, all the rest of it. Britain, Europe shifts over to the United States. That economy really gets into gear in the late 1800s, 1900s. But then interestingly, in the post-war period, so post-1945, Japan emerges from the ashes. South Korea, Southeast Asia, more recently China, India, and all of that has been pulling that center of economic gravity back towards Asia, and that will continue. That's one of the fundamental megatrends, and you saw some evidence of that earlier on when you were looking at airplane bookings or whatever, that Asia accounts for a much bigger share of all of this, and all of those measures, a growing middle class, a growing demand for products and services, that's right here within the region. And that's a fundamental trend that people need to get used to, and particularly companies, I think, headquartered in Europe or North America need to get a much deeper understanding of what's going on within this region. Okay, let me move on then. So that's the sort of big picture that we see for the global economy. Let me just talk you through some of our risks here. So every month we publish our economic outlooks, how we think things are going for the global economy, for countries and everything like that. We also publish a list of our top 10 risks to our forecast. And I'm just putting this one up here from July 2018, which I think was maybe the last Travelport conference in Bangkok. And these were the risks that we had at that time to the global economy. And just very briefly, down at the bottom, low risk. We don't think that's going to happen, and it would have a limited impact if it did happen. So we ascribe it a very low number of 5. Right the way up to 25, that's the highest score that you can get. We think anything that's rated at 25 is very, very likely to happen and will have a big impact on the global economy. And back in July 2018, global trade shrinks as the US steps up protectionist policies. That's happened, so that risk comes out of our risk scenarios and informs our main forecast there. And you can see some other risks that we thought there. Interestingly, this one in the Middle East about energy supplies. Come on to November 19, so this is where we are today. You'll still see that trade is right up there, but it's shifted a little bit. There is a trade war going on. Trade has slowed down, particularly between those two key economies. But we're now worried that this US-China bilateral trade spat splits into something a little bit more damaging, that it moves into the financial sphere, that it moves into technology, that it disrupts the global supply chains that are sort of, the veins and arteries of the global economy as well. So that's where we are. Let me just come back and focus a little bit on trade. So this chart is quite an interesting one. If you go back over here, this is looking at January 2018. Right, at the extreme left of all of this, and then how many months out from January 2018. We start there because this is really where the trade war started to happen. This is where protectionist sentiment for the United States, in particular, started to bite. And those were the tariffs there, you see the dark blue, that America started to put on aluminium, washing machines, and steel. And back then we were very worried that, putting 5% tariffs on, or whatever it might be, is going to slow the global economy. Look what's happened over the past nearly 2 years. Step by step and tit-for-tat retaliation, and tariffs have gone up and up and up on that major relationship between the two key economies in the global economy. And now, by now, virtually all US-China trade is covered by tariffs, and quite high tariffs as well. This is a tax on business. This makes things more expensive. This makes investment decisions more difficult. It slows down economic growth. To date, a lot of that has been absorbed by companies, by big exporters and manufacturers, but it's now starting to go into the economies, particularly in the United States, and increasing the price of goods there as well. So, where are we with the trade war? We have a so-called phase 1, and I put it as unphased because we're not particularly impressed by it, phase 1 deal between the United States and China that won't take the trade war away. What it will mean is that the next set of tariffs that are due to come on next month, December the 15th, will be suspended. But all of these will still stay there. And we think that those tariffs will stay there right the way through 2020 until we get past the US presidential election in November of next year. So yes, there's some progress. We do think that this phase 1 deal will be signed, but we think it will be very narrow, it will be shallow, and it will be quite brittle as well. We were supposedly going to have President Trump and President Xi in Chile at the APEC meeting just last week, which was cancelled, and they were going to pen it then. So we're still waiting to hear when this is actually going to be agreed. But also remember that this is just phase one, and it's quite straightforward. It's things like China's going to agree to import more soybeans and agricultural products from America, that it's going to liberalize its financial market a little bit. It's going to strengthen its intellectual property regime a little bit as well. But the really contentious issues like technology, like 5G, Huawei, all the rest of it, that's phase two, phase three. Much, much, much more difficult to see how we're going to get any agreement there, because this is a fundamental issue of competition between these two economies. So, the trade war is not going to go away. This is a new reality that we're in. And this is the impact that it has. So this is some calculations from the IMF looking at what does this trade war mean for growth in those economies. And what you'll see there is two lines, the United States, China. The dark blue line are the direct effects. So, things being imported becomes more expensive. But then the lighter blue line is the indirect effect, the investment decisions, the suboptimal supply chains that you'll have to set up, and so on. So there's a deeper effect, but actually quite limited for the US economy as a whole. This is a big continental economy, the United States economy. So actually, the trade war is having a negative impact, but not massive. Much more damaging for the Chinese economy, of course, over the past 3 decades or so, has focused on that export-led model of economic growth. So it's really starting to pull down growth in this economy, and you can see the impact of that now. This is just another way of looking at all of that. It's going back to January 18 again, the start of this sort of bilateral trade war, and you see how trade between these two economies has started to come down and down and down. That means, for example, that manufacturers in China are quite pessimistic about the future. They're not employing as many people. There's not as much money going into the economy. You can start to see how this impacts on the real economy, people's wages, and economic outlook, and so on. Not all doom and gloom, though. Scott was telling me not to be so pessimistic. So a little bit of good news around trade. We've just recently had the RCEP countries, a regional comprehensive economic partnership, RCEP here, and you can see the countries within that big circle. They've just agreed to ink a new trade deal to bring all these countries together. India, unfortunately, decided it couldn't join that, which is a big loss because that's a massive economy, growing economy with a huge population. But anyway, it documents a commitment by these countries to come together to reduce barriers to trade and stimulate their economies. We've also, just last year, we had the TPP signed, the Trans-Pacific Partnership, which is something that President Trump took America out of, but it's been signed by the remaining 11 countries, most of them here within the region, although places like Malaysia still need to ratify that. Vietnam is benefiting from being in these trade agreements as well. Vietnam's booming. It's 93 million people growing at about 7% a year or so. A lot of investment that was in China is going to Vietnam. A lot of investment that was going to go to China is coming to Vietnam. So, it's a hot spot of the Asia economy here. So it's not all doom and gloom. And the European Union as well, very proactive in pushing free trade agreements with places like Japan, for example. So, there are some positives that we can see around the trade, even as the big picture, the WTO, the World Trade Organization, is on its last legs, I think. And this is one of the things that we are a little bit concerned about. So this is going back to that threat that we had on that list of the world splitting into different sort of technology systems, been described as the splinter net. Are you going to allow Huawei to build your 5G system? Well, many countries say, no, we're not interested. You can see them there in red. So the US, Australia, Japan, France, for example, have said they won't be building this 5G system. So what system will they be building? What sort of protocols are you going to be using for the next standards of technology? And we do run the risk of the world splitting into a sort of China-centric bloc and a US or Western bloc when it comes to technology. That's suboptimal. That's inefficient. That will increase cost And it also politicized businesses and countries as well. It's a very, very political issue. And we've seen the politicization of businesses as one of the big issues over the past couple of years as well. Huawei is a good example. ZTE, think about Cathay Pacific, FedEx, all companies being sucked into these political decisions, whereas previously, politics over here, business over here. That's another challenge for people to navigate in the global economy. Okay, let's come on to the main course then, thinking about our growth forecast. Just before we do that, I do want full transparency. I'm going to fess up on our outlook this time last year, or in July of last year. How did we do? So on economic growth, pretty good. We thought that the global economy would grow at 3%, but our forecast was wrong by just a little bit. So 2.9% is what the global economy coming. We were spot on for those economies and slightly off on a couple of. So not bad on that one. In the financial markets, we said the US would be strong, and it was for most of the year, and also that the RMB here in China would go below 7. That's happened as well, and it's stayed down there, causing the United States to label China as a currency manipulator, competitively devaluing its currency as well, which we don't agree with, but another sign of tensions between those two economies. We also got the oil price right, a little bit off on commodities, and we also thought that there would be no currency crisis in Asia. This time last year, there was a lot of concern about rising dollar, impact on emerging markets. We had Turkey and Argentina had their financial crisis, and people were worried that that was going to happen in Asia. It didn't happen. We didn't think it was going to happen either. In politics, you can see some of the forecasts that we had there. We thought that the Mueller inquiry would actually be much more serious than it has. It's sort of fizzled out. We thought that the BJP wouldn't, in India, wouldn't maintain its majority. We got that very wrong. Modi came back with a much stronger majority in that country as well. And then we also thought that Brexit would drag on longer, wouldn't drag on as long as it has. So we're completely wrong there, as are most people around that one. And also, I think we got the trade right. We thought that there would be a slowdown in trade, that it will start to impact on technology and so on. The big one, I guess, we didn't get right is that we were, at the beginning of last year, we were expecting the Fed to continue hiking interest rates, slowly, getting up to 2% and above. That's its target. Actually, in March of this year, it turned course and started to cut interest rates, as I mentioned earlier on. So I'd say maybe an A- if I'm being generous for our forecast. This is what we think for 2019, and what you're looking at here, I've got a colleague who's a bit geeky, and so he likes to put data into these sort of these charts here, but you're looking at countries. So over here you can see Japan, and what you've got here on this chart is economies that are growing above the global average up here in the sort of blues, and economies that are growing below the global average in the reds here. So you can see a mixed picture around the world, and I won't go through in detail, but for instance, Britain is growing at maybe just 1.2% this year. A lot of that is going to be down to Brexit-related uncertainty. So you can see that in red below the global average of 2.3% we think this year. And again, just to reiterate, that's a pretty poor figure. Even though Asia is where we see a lot of the stronger growth, Asia itself has slowed down, and this year hasn't been good for the global economy. Good news is that we think that next year will be slightly better, and the years after that will be slightly better again. So 2.5% growth next year we're forecasting for the global economy. We will continue to see a slowdown in the US economy. But actually, if you think about what the Fed has been doing, cutting interest rates, and we're also seeing a lot of talk about fiscal stimulus as well, we think that that will support growth in the US economy, and it will start to pick up again as we get through 2020. China will continue to slow, but it will be posting its 6.1% growth. And next year is a really important year for China. The stated aim is to double GDP in China from where it was in 2010 by 2020. And China is on target to achieve that if it achieves 6 point or so growth this year and next year as well. And we think government policy will be very much focused on making sure that that really important target is met. However, after that, China will need to be dealing with a lot of the challenges that are built up within the economy, not least this massive build-up of debt as well. So after 2020, we think the government will be making changes in economic policy to deal with some of those challenges, and growth will continue to slow. But don't be too concerned. I mean, economies can't grow at 9, 10, 11% forever. And in fact, a lot of that growth that has been led in China from massive investment in infrastructure, the high-speed trains and the airports and all the rest of it, that's now turning to a more sustainable model of consumer-led growth as well. So that's a positive trend. So China will continue to slow as it transforms. Elsewhere around the region, we think, or around the world, we think the European Union will pick up a bit in 2020. Germany has just avoided a recession. And actually, if you look at those economies, domestically, demand is quite strong. For Germany in particular, the big export powerhouse of Europe, it's exports, it's manufacturing, and that's global demand. In particular, it's the auto sector that's going through a big structural shift at the moment as well. So domestically, the picture is not so bad. I'll come on to ASEAN in a bit more detail in a moment. Actually, just to go back, Japan there, very, very slight growth that we see. A lot of that is because the sales tax in Japan was hiked in October of this year, so it went from 8 to 10%, and that generally will depress economic growth as we go into 2020. Although Japan had a fantastic Rugby World Cup and will have the Olympics next year as well. And this is what we think for that period 21 to 24. So again, a lot of green on the map there. We do think that this is the sort of low point for the global economy. Things will pick up and continue to grow from there. I'm just going to quickly come on to ASEAN economies, because these might be of interest for a lot of people in the room. And ASEAN has been suffering from the fallout from the trade war. Well, some economies have. Vietnam, as I mentioned earlier on, has actually been benefiting from all of that. But one challenge for Vietnam is that as more and more exports come from Vietnam to America, rather than from China to America, Vietnam starts to come up on the radar sites, the gun sites of the White House as well. So watch out for some trade friction there. So generally, we see a moderation of growth within Southeast Asia. We think that ASEAN will grow at about 4.3% next year, and probably in 2020 around about 3 as well. But some of those high growth economies we shouldn't be too worried about. Cambodia, Vietnam, Laos, Myanmar, all 6, 7% growth. Very strong there. Philippines and Indonesia, again, growing at 5% or above, which is below par, but it's still, pretty solid growth there. So, this is just, I think, a year for ASEAN to get through, and then things pick up throughout the rest of the forecast period. I'm just going to leave you here because my time is up. I just want to take a moment to sort of look ahead as well. Every year, about this time, we publish something called The World In, and it's The World in 2020, of course. And I just looked through that yesterday to see what some of the key themes and issues were in there. And I put that into this word map. So we got things like Tokyo Olympics coming up. Is there going to be a recession? No, we don't think so, although there are a lot of downside risks. Brexit there, changing demographics that you heard about earlier on. At one end in Asia, you've got the very rich old consumer in Japan willing to pay $3,000, $4,000 for a train trip, from Tokyo down to Fukuoka or Kagoshima. And you've got that massive young growing population in Southeast Asia, particularly Indonesia, Malaysia, India as well, that's going to be driving growth forward. The corporate realpolitik, I mentioned that a little bit earlier on about politicization of business. That's something to be very careful about. Who are you doing business with? What are you saying? Are you going to get yourself in any difficulties with any regimes? We've got the Dubai Expo coming up as well, so all of these things there. Probably the most important one, though, is to watch out for the Trump show, season 2. We're not quite sure if President Trump is going to get elected or not. We think his path to election victory is very, very tight, very, very narrow. We've got this impeachment process going on as well. We don't think he will be impeached, but this might have an impact on those swing voters in many of those states where Trump secured just a very, very small majority. Until we know who the Democratic presidential nominee is going to be. It's very difficult for us to say whether Trump is going to win or not. So a lot of uncertainty around there still. I'm very much out of time, so I'm going to leave with that. I'm going to be here today, so please do come up and ask me some economic questions. I'll be very happy to answer them. Thank you very much and have a great conference.